Hey traders, David Frost, Lazy Gap Trader, looking to buy UCTT at 25.09. Most likely the stock's going to probably pierce $25 a share. Okay, so I'm in. Here we go. Pierce $25. Now we should get a snapback. This is one of our morning gap trades. And what I've done is I've sent an email to members identifying these two levels. You see them both on the chart. We had two trades today in this stock. 27.07 and 25.09. Here we go. We get the bounce off 25.09. I think this is a fantastic level. I'm gonna look for at least 30 cents on this trade. That's a fantastic scalp trade if I can get it. We should get a rally off this level at 25.09. Potentially, the stock could even put in a bottom for the day here. That's a little premature to say, but we should get a pretty good bounce off the $25 area. There's a psychological level or a psychological phenomenon with round numbers, and 25 is a round number, 50 is a round number, 75, 100, and even the even numbers, 25, 26, 27. Stocks like to come to those numbers. They like to typically pierce through those numbers, and then they like to reverse in the other direction, at least for a scalp trade. But this is different. This is one of our morning gap trades, and it happened to coincide with around the $25 level. So what I do is teach a course at Lazy Gap Trader where I teach traders how to calculate and come up with these specific price levels on stocks that are gapping higher or lower at the open. You can see here UCTT traded yesterday or closed yesterday right around almost $33 a share, 32 and change. It was gapping significantly lower at the open, getting quite the haircut. Look at this bounce. Getting quite the haircut, down 23% as we speak now. This is the second trade of the day in this stock. The first trade of the day came right at the opening bell in the first minute of the day, and you can see what happened. The stock traded right to the 27.07, slightly below it, and snapped right back, going right back almost to $29 a share. Pretty spectacular trade. And here we go, 25.34. What happens with this trade is if we can get this stock a little bit higher and get some, you see the volume coming in behind this trade down here. We're trading 367,000 at the bottom of the chart shares in this 10-minute candle alone. And basically, if we can get a high volume reversal candle, that would be an indication that we could potentially have a bottom, at least temporarily, in for this stock. I'm looking for 25.50, and what I'll do with that is I'll take off half the trade at that point. And if we can get 25.50 out of this stock, and I'm going to sell half the position. Hold on a second. I just got to put that order in. Okay. So I'm going to sell half the position at $25.50, and I'm going to hold the remaining half of the position to see if I can't get the stock slightly higher. Maybe we do, and if not, the worst case is I'll stop out with a stop in the money, and I'll trail the stop accordingly so that you can't turn a trade like that into a losing trade. It becomes a risk-free, emotionless trade. These are some of the things that I teach in my course at Lazy Gap Trader. Most importantly, I teach traders how to come up with these specific price levels. Look what you have here. You have a stock that was gapping down over 20% at the open. Well, the first level wasn't quite down 20%, but it was close. Gapping down from $32, $33 a share yesterday, taking a nice haircut at the open, and I'm able to teach my traders how to identify a level like 27.07 where you should get a bounce off that level, and then another level, second trade of the day at 25.09. Here we go. Look, we're coming up to 25.5. I think it's going to hit. You see the volume coming in this candle? There it is. Done. I'm out of the first half of the trade, and you see the volume coming in this candle. Look at the volume in the first candle of the day at almost 700,000 shares, and look at this volume. This is a stock when you see the volume like this, it's an indication. It's not 100%. Nothing in the market is 100%, but it's an indication with heavy volume and the stock potentially putting in what might be a tail candle. That's an indication that it could potentially be a low for the day, or at least a temporary low for the stock, and we should see higher prices. If we can get this stock to go above the high of this particular candle, right around 25.5, if we can get that to hit, we should get another leg higher up to, another 15 or 20 cents higher in this stock. And when you're talking about a $25 stock, 15, 20 cents is a big deal when you have a scalp trade that we've already been in the trade since 25.09, and we're already at almost 25.5. We've already hit 25.5. That's a tremendous scalp trade. This is exactly and precisely what I teach in my course at Lazy Gap Trader. I teach traders which stocks to identify that are gapping higher or lower at the open. I teach them how to calculate the specific price levels that should produce. First, the stock should trade to like a magnet like you saw here, and then once they hit those levels, there's a high probability that these stocks will have a price reaction from those levels in the other direction. We only want the trades that produce the highest probability of success, and that's what I teach in my course at Lazy Gap Trader. I teach which stocks it works the best with, what are the criteria we're looking for, what type of volume are we looking for, what type of gap higher or lower are we looking for, and everything in between. Look, 25, 52, we should get another leg higher in this stock. And I'm going to hold this stock and look for higher prices. Right now, I've got a break-even stop, and I'm most likely going to trail the stop behind this stock as we move and if we move higher from this level. Now, once this candle closes, what will generally happen if it puts in a tail candle, which right now it's a tail candle. So if we close around the top, there's another leg higher. If we close around the top end of this candle, for example, that will produce a tail candle. Following the tail candle, what you'll normally get is a retracement. It gives traders an opportunity to re-enter the trade or enter if they're not already in the trade if we retrace about 50% of the tail candle. So if we retrace about halfway down this tail candle, you have what I call a defined stop loss. Any close below the tail candle and you move out of the trade, but likely story is that we retrace half the tail candle if we do put in this tail candle, and this candle is going to close pretty shortly. If we retrace that, it's another opportunity, and we should see another leg higher in this trade. Now, I'm not going to be on the video the whole time, but I will have half this position, and you can come back and check out what happened with this stock. You'll see I'll either have gotten stopped out, most likely in the money, or a break-even stop, but I've already have half the trade in my pocket. I've already booked half the profit. So this trade is a risk-free, emotionless trade, and it cannot become a losing trade. And these are the things that I teach in my course at Lazy Gap Trader. Now, on the second half of the trade, I would be looking for this stock to get well over $26 a share. But it's a little premature right now. Wait for this candle to close, and then we'll see if we do for sure put in the tail candle. But I'm going to start to wrap up this video, and I just want to mention that everything that you're seeing here and everything you've heard me discuss is taught in my course at Lazy Gap Trader. Everything you need to know in order to trade the gaps successfully is taught in my course at Lazy Gap Trader. Now, the likely story is we close this candle. The likely story is we're probably going to come back and retrace about halfway down this last candle that just closed. And if that happens, that's an opportunity to re-enter the trade if you're not already in, for example. And I'm just giving a lesson for traders when you see this in the future. Doesn't matter what the name of the stock is. All stocks act and react the same way. All charts act and react the same way. This is what I teach in my course at Lazy Gap Trader. The names on the charts make no difference at all. Ultra Clean Holdings. I don't know what they do. I don't care what they do. It doesn't make any difference. We're just trading the chart. We're trading the specific price levels that are important to the chart, and that's what I teach in my course. I teach traders how to identify and calculate the specific price levels where stocks will trade to and have a price reaction from in the other direction that produces high probability trades. And with that, I'm going to wrap it here. Another live trade from lazygaptrader.com. I'm David Frost. Come over to check out the course. I can teach you everything you need to know in order to trade the gaps successfully. Thanks for tuning in, traders.